All right, good afternoon, everybody. Wall Street Jesus here. Tuesday, post market. We're open to the public today. So, welcome all you guys on social media. Every Tuesday, we open it up. I have a tendency sometimes to talk um, member speak. So, some of you non members may not have a clue of what the hell I'm talking about. Just give me a heads up so I can explain it in English if I do that throughout the course of the webinar. But what a fun day to talk about. And, this market, again, if you're an active trader, you're going to at least find some enjoyment out of it. But at the same time, you get a little frisky. You're going to get hit over the head, I think. And, yes, I'm biased. And those of you who are members know, because I've drilled it into your heads at this point. But if you are not paying attention, I think, to trader sentiment and you're active out there in this market, they're going to kick the living daylights out of you. They're going to beat the living daylights out of you. And there's no way around it. Whether you like it or not, is it the start of a bear market? Are we just in the midst of a vicious correction? How bad will it be? These are all questions that you're going to waste a lot of time trying to figure out the answer. And even when you think you have it all figured out, the market will lump you up and it's going to be a costly lesson. And hopefully you learn from your mistakes. But this is a trader's market, okay? And there's one thing you have to make sure you're doing, and I know I beat a dead horse on these webinars because even in a bull market, I have a tendency of doing this too much. But again, it's just because I've drilled it in my process for these particular times, okay? Because 2017, as great as it was, as fun as it was, as you could just hold on to everything and things continue to go higher, that's not the norm, okay? And even in bullish phases, you enter corrective phases like we're having right now, and where some of the things I've learned over the course of my career have become habit forming, and I'm glad that they have. Okay, and what I mean by kind of the habits I've drilled into my head, if you look, okay, if you remember the last about a week ago, and you can almost sense it coming, okay, it already happened once, okay, so you would think that players in this game would be aware of it, right? It just happened literally last month. You had a powerful squeeze off the lows, okay, coming off extreme bearish sentiment where everybody pretty much on the long side threw in the towel. You had bearish positioning at an extreme, okay, and that sets up this monster squeeze here, okay, and off two events, mind you, where you had the Fed kind of capitulate a bit. And if you want to call a resolution out of this trade war, we don't even know, right, how quick things can change in a day. So the bottom line for me, and you hear a lot of things being thrown out there, right? You hear, oh, it was no resolution. We have no information on the negotiation with China, the trade war. Well, that was the case yesterday into the gap up. So what, they just figured that out today? But today, this morning, you started to hear that as an excuse for the sell-off. Then you started to hear about the inverted yield curve. And, you had riffraff throwing that around, and they don't even know what the hell that means. But they were blaming that on the sell-off today, okay? And prior to that, and this goes to show you, this point I'm about to make here, it goes to show you what a waste of time all this stuff really is in regards to making money actively playing this game. If you remember when we first started this correction, it was being blamed on potential inflation. Rates were going to rise too fast and the Fed would have to react, right? Remember, 3%, that's the number. Always watch that number. And right now, okay, literally, what was it? Feels like a couple of weeks ago, what, a month ago? Now it's the total opposite of what they're blaming this sell-off on. The total opposite. Okay, so it goes from inflation to now deflationary. Economy slowing down, recession. All right, so it goes to show you there's no reason to get tied up and tied into the reasons. There are a lot more intelligent players in this game than you and I, and they can't figure it out. So you got to, in my opinion, you got to come to that conclusion eventually in this game. Otherwise, you're not going to stick around. Okay, go become an analyst and get paid for being wrong but sounding intelligent. Right? There's nothing wrong with that. That's what they do. So for me, I've realized that, again, the most important thing is trader and investor sentiment. Why? For all the reasons I just told you. When we all together appear to have things figured out and we're all positioned at an extreme the same exact way, the total opposite is going to happen. And now even more so when you have these algos and machines out there already programmed to sniff out these type of readings and run you over. All right, and you guys know, okay, I know I as they say, I talk my book, right? I'm a big sentiment and sweeper guy, so I push that on you in a sense. But I said, even if you aren't members, okay, and you have no intentions of becoming members, even if you just take it as simple as paying attention to put the call ratios in this environment, it will help you out in a great deal. All right. And it's not a coincidence that down at the lows, and yes, the put the calls, okay, they're general. They did come a little bit early. All right. So if you used it as an exact buy signal into weakness, you more than likely were a couple days early in buying. Okay. But again, had you leaning bullish instead of bearish into the lows like every other jabroni out there. All right. And on the flip side, after everybody's all bearish and you have these elevated put the calls, what happens? Market squeezes. Okay. Little by little, that bearish sentiment softens. Right. They're still not believers yet, but they're less bearish. And then lo and behold, into the tariff negotiation, trade and resolution, whatever label you want to put on it, they give in into the gap up. So fitting. And yesterday, if you looked, the equity put the call, we had a 5 handle on that equity put the call. The total put the call was one of the lowest readings we've seen throughout this whole corrective phase here, this whole correction. All right, that's just, again, a general put the call we're talking about here. And there's a lot more efficient stuff than out there. Okay, but it gave you an idea of how everybody who leaned bearish into the lows started to lean bullish and talking about Santa and the bottom's in and blah, 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 blah. And lo and behold, sometimes it doesn't happen the next day. Sometimes it takes a couple days. Sometimes maybe it just washes them out with, a corrective sideways choppy action that slopes downward. Okay, but somehow, some way, this market is going to run. They're going to run over those bulls, especially in this type of climate. All right, and I know sometimes I make it sound a little too easy. Okay, it's really not that complicated. Once you know what to look at and what to look for, it's not that complicated. What's difficult about it is reacting, getting yourself to react when those signals are flashing, green and red. Getting yourself to find a way and get long something when everybody else wants nothing to do with stocks, is shorting, making money, bragging about their short positions and shorting more, for you to find a way to get long something down here. Okay? And again, even more difficult when you have a rip like this and it looks like everything's storming back. I started to hear the B word. Every time I hear that word, I shit my pants. Excuse my French. Breakout. When I hear retail start talking about breakout, I know the end is near. So we started to hear that word breakout yesterday. And you have to at the least get yourself to take some chips off the table, roll some positions. Maybe you want to hold some stuff, that's fine. But most of all, not put on any more risk. And you wouldn't believe how difficult that is to do. Okay, maybe for me, it comes across a little easier, because I've been doing it for so long. It's easy for me, right? I developed these habits. I've been doing it 20 years. So it's easy for me to talk about it. But, I see it every day. I see people who are, paying members in the room buying something yesterday into a scorched squeezometer, a scorched bullish sentiment. And not only that, put sweeper activity on a gap up yesterday, on a green day, everybody with pom-poms out regarding the China resolution. You had put sweepers come out and annihilate things. Not a good-looking call sweeper to be found all day yesterday into a gap up. So for me, that's it right there for me. Basically, what we just saw happen from the lows to the highs to this washout today, we can blame this day on anything. I couldn't care less what excuse they want to put on it. For me, today was a sentiment flush. Okay, that's simple. It was a washout of all the bulls that piled in, who had FOMO, who thought Santa was here. They wanted to hop in the sleigh before they missed it. Okay, and the same thing over and over and over again. So in the playbook now going forward, if you're saying, all right, Jesus, that's spilled milk, what do you look for going forward? It's the same exact thing. It's the same exact thing. Okay, when bears are leaning for further downside and are positioned that way, and I start to see sweeper activity grab the bull call side, that's all I need to see. There's nothing else. I'm not looking at 200 days. I'm not looking at 50 days. I'm not looking at Fibonacci's. I'm not looking at anything. The more bears, the better. The more gloomy, the better. As long as what I'm looking for lines up. All right. And another difficult part about this, because again, I don't want to make it sound too easy. It's the in-between. Okay, it's the in-between. Like, you guys don't understand. I'm talking here like I'm some disciplined, by the book guy. I got degenerate blood to the fullest. I gotta seatbelt myself in and tie my hands around my back anytime I see weakness because I'm so giddy to buy something. All right, but it's the in-between, especially in this environment, to allow things to set up. That's what a lot of us lack. We lack the patience and allowing the quality setup to take place. That's what makes it difficult. All right, but one thing you will realize, it's either going to be a costly lesson or you're going to stay on top of it and focus on it so you make sure you do it. You have to have something that keeps you in check when you should be in check. All right. And if you're that player out there with that chip on his shoulder or her shoulder, that you think you're going to be the next Paul Tudor Jones and you can trade anything underneath the sun. I can trade Bitcoin, I can trade futures, I can trade this, I can trade that. It doesn't matter, up, down, sideways, crooked. Well, good luck to you. But right now, as difficult as this climate may be, you know, a lot of people who I've traded with, they actually enjoy this type of environment better than a slow trending environment, you know, as active players, as active traders. Because again, if you remember, we were talking about like 2017. If you put a sell ticket in, you felt like a jackass, right? If you sold something for a profit, you were an idiot because things just continued higher. And people get into that frame of mind, right, thinking that's going to last forever. And then eventually they give it all back and then some. But this is the type of climate where when you take a profit, you feel like you did the right thing, right? When you found a way to take off risk, when bulls were getting a little too giddy, today made you feel good, right? You felt like, you know what? Maybe I'm getting the hang of things here. So that's why I run into a lot of players who are active who enjoy this type of market better. Now, again, it depends on what you are. You know, if you're telling me, no, I like that uptrend, slow uptrend, then maybe you're not an active player, an active trader in this game. Maybe what you should focus on doing, maybe you should be a trend trader. Okay. And that means you're a lot less active. You're riding trends. And guess what you're doing right now? Nothing. Zippo. All right. So if that's you, then right now you should be out of this market and not doing a thing because there is no trend. But like I said, a lot of us, we enjoy this. And, you know, a lot of you guys play on the short side on a short term basis. Okay. And you know me, I think it's really difficult, but on days like today can be extremely profitable. So if you play both sides, I mean, this is what you want here. This is the type of price action you want here. All right, but at the same time, you have to know where the public money stands at all times. Because if you're lined up on the same side as they are, you're in big trouble. Big trouble. And, you know, for those of you who have no idea what I'm talking about, you know, just a couple things we look at, like this is the squeezometer. This is more of a short-term intraday type indicator, okay? This was the close on, today's what, Tuesday, on Monday. So going into this morning, this is where this thing was. You know, that's pretty high. You ask a lot of members, private Twitter members, anything over 65, and they don't want to even look at the long side, okay, until things cool off. This thing was scorched. Okay, another thing we love to look at in this climate, you know, this Nova Ursa, the right X funds. Look at these guys. Like, do they know? This is what we were talking about today. Do they know how bad they are? Do they know how bad they are? Here, positioned for Armageddon. Massive squeeze. What do? They power right back in from minus 200 to plus 200. And now what do? They got caught on both ends. And if you go back and look, and we look at this daily, this happens all the time. It happens all the time. I don't mean to laugh. I don't want to see anybody lose money, but it happens all the time. Oops. I must got stuck there. You know, so we're taking, you know, put the calls and we're adding a little more element to it, right? So the squeezometer is more of opening activity only, trying to get an idea of retail activity only. But basically, they're all a measure of the same thing. When they're all leaning for more downside, that's where we're looking to get long. We're not looking to bum rush in on the first day and buy anything we could get our hands on. Let them hang around down here. Into weakness, we'll continue to look to get long. And then when this thing gets up here, we want to de-risk. Without a doubt, we don't want to buy anything. That's for shit sure. All right. So again, I don't mean to sound too like unprofessional, and I'm not talking more economics on here and stuff like that, but I'm just giving you my impression. And like I said, I don't like to brag about how old am I and how long I've been doing this shit, but you know, after a while, you reach a point in this game where you have to realize that there's a lot of wasted time. You know, the noise. A lot of people like to use that expression. There's a lot of noise. There's a ton of noise. There's a ton of noise on a day-to-day basis, especially when you're looking at this stuff tick for tick each and every day. So much noise. And it's the ability to just focus on this stuff. You know that works. Waiting around for that stuff to line up. And then just make sure you're applying some sort of risk management behind it. Money management, obviously. You could have the best thing since sliced bread. If you don't apply some sort of money management around it, you're dead. But in my opinion, that's what it all comes down to. All right, so what we're doing, again, I got to keep remember, this is for with non-members too, but what we're looking for now is basically the stuff I showed you to show the opposite again. Show that bears are feeling a little giddy, that bulls are starting to capitulate, and then what we're looking for sweeper activity to confirm that the smart money, the sharp money, is taking the other side. That's the ultimate confirmation. So, like, I'll give you an example. Down here into weakness, okay, we started to see a lot of the sentiment indicators we look at start to flash green. Okay, even some of the intermediate term indicators that we only look at in corrections and bear markets start to flash green. And what we wanted to see sweepers, okay, which in simple English is aggressive buyers out there in the option market, confirm that they were positioning for a squeeze. Okay, and lo and behold, little by little, we started to see that happen. Right? First, we saw Neil Diamond show up and buy the DIA. Right? So again, it's just the same exact thing we're looking for now. Again, so we're looking for Neil to show up potentially. Okay. Then we started to see somebody spraying Uzi into SPY in the Qs on the ETF side. We spoke about, you know, the SPY sweeper, which was super aggressive. Okay. Then we wanted to see it start to spill over into some names, right? Preferably maybe high beta names. So we know it could be market moving. Facebook, Google, names like that. You know, so all the pieces started to come together, and you know, there was a nice squeeze. So now, basically, it's for me, it's one or two things are going to happen. Okay, either we see this type of action that I just explained to you pop in other words, show up into the weakness before sentiment lines up, but we're going to be pretty close at this point, thanks to today. All right, but either they're going to show up any day now and front run that sentiment shift, or you're going to see weakness line up, set off some sentiment signals, And any flow we see, there's going to be a sign of a squeeze coming. Simple enough. I mean, you understand what I'm saying here, or am I talking? I try to stay away from the lingo so you guys understand what I'm saying. All right. And those of you who are just looking at put the calls, I don't know where we closed today. Maybe some of you have the numbers. Generally in equity put the call, you see anything over north of a 7 handle. That would be bullish, meaning they're bearish, right? We're looking at it in a contrarian way. All right, and anything less than a 6 handle is where you don't want to really put on any more risk. Anybody have a closing equity or total put the call number? I got to X that out to do it. Anyway, I'll post them on my personal Twitter when I get done here. Yeah, they should be updated now. Some of them update off the CBOE later on. All right, as far as action today, guys, let me take you into the room here so you guys could see what went on today. All right, and to me, this was, again, for those of you who are members, you got to pay attention to this stuff, because when you see this is where you have to take notice. And a lot of you have, so I'm not saying most of you did. This was the board today, okay? You could see a ton of red lightning bolts. So meaning the put sweepers, the put side was the action catching the sweeper activity, the more aggressive activity. Like, look at this day today. Was there any sign of hope throughout this whole day today as per the flow? Nothing. All right, and yesterday into a gap up, there wasn't a sweeper that was decent as far as I can remember. I think the best bullish bet, the top bullish bet yesterday was that boot, and that wasn't even a sweep. All right, so literally hardly any buying yesterday, not much today. Here's some of the bullish activity to take a peek out of today if you are looking to keep an eye on something. We had this thing, which is always interesting. I already played it 3-4 times. I almost played it again today, but I held off. PCG. All right, and so you know what's going on here. You know the California fires have been weighing on this thing, okay? And there's been a ton of weakness, right? Vicious selling. You had call sweeper activity get aggressive into the lows. They basically nailed the low, okay? And since then, there's been bull flow. Been bull flow. Sweeper showed up again into this consolidation. We played it again, had a nice little move. And today you had some repeat Jan and March activity. Okay. The reason I'm interested in this still, I got a couple of runners left from the first couple of times, but the reason why this still interests me to where I might play it again, especially the March calls, the utilities have been the place to be. All right, utilities have been on fire right now. You give me any utility name, it's scorching. PCG would probably be the go-to ute if it wasn't for these California fires. As a matter of fact, a lot of sharp money got caught in this PCG. We saw in the filings, right? Tepper, the whole crew. They were actually buying here when they were rotating out of tech, and they got screwed from the fires. How are they supposed to know that, right? So my point being, there's a lot of Sharpies involved already in this name that probably are looking to average down, considering the utilities are still where the rotation money's going into. and this thing has upside. Now your downside is obviously what comes out of that whole California scenario. But for me, this play is perfect for options. Perfect. Because if you want a high reward play where you risk what you put in, you buy some March calls, and you put in what you're willing to risk. You got a lot of room to the upside there. So that's why this thing interests me on the option side. Can they go to zero? Yeah. But so can anything else. But you have, some wise guy money involved, and you have a red hot sector, which you can't say about a lot of things. All right. Another utility they've been buying with the PCG is this EIX, which I think has California ties too. Got hit. And same thing. It's just been a less aggressive than the PCG. In other words, hasn't been as active as the PCG. But there's been buying. There was some more buying today. So maybe you like that one instead of the PCG. It's up to you. Some of the utilities that have been strong throughout, and NRG has seen flow. Look, this is what they look like. These things are machines right now. And isn't it fitting? Do you guys remember, like, utilities and all these interest rate plays were getting beat up because the rationale was because interest rates are going to go higher? Who would want to buy a utility? That's what the rationale was, right? Why would you put your money in utilities when you can put it in treasuries and get similar interest and safer? That whole plan backfired now. And that's why you're getting this bum rush into utilities and a lot of these defensive names. All right, so you got the PCG, the EIX. Other than that, guys, there's not much out there. Energy, some of the energy transportation names saw a little bit of flow. I don't like them. I'm not playing them. But if you have been looking at these names or the sector, PAA caught some buying. They were buying this thing into the lows recently as well. So I guess they're looking at this as an opportunity. Another one was a GPOR. This is cheaper, I think. Yeah. That was actually up on the day today a little bit. And then another one was TRGP. This was the stuff they were buying today. Oh, and I got one more for you that you could keep an eye on. Shutterfly. You want to see a nice chart? Look at this menagerie. Woo! Beauty, huh? What a beauty. That's a beauty right there. So the problem with this, it was a good-looking order. But again, the only call buyer that's not a utility, and it was one order, so you don't know, could be a short, right? Somebody's scoring on the short side of this thing. Maybe saying, yeah, this is a little too much here. I'm going to hedge some of my upside risk, buy some calls. That's possible. They were March calls. So I would probably, if you're interested in the name, I would keep an eye on it and wait for more action, or, the market set up as a whole, and it could be a name you throw into the mix. Let me see what you guys are yapping about here. Did I see 100,000 SPY 283 buy yesterday? Yeah, that was a roll. That was a roll, Michael. So, that's the issue with trying to screen for just size option activity, guys. If it was that easy, the whole riffraff world would be gazillionaires. There was some aggressive and size buying of SPY, as we mentioned, the QQQ, the DIA, pre-squeeze. So you got to understand when this happens, okay, and that's again just from experience more than anything else. You're not going to have the smart money is not going to start banging SPY calls down here and then put fresh money to work up here after 5 straight up days. They roll. And in simple English, what that means is that's their form of profit taking. Okay, so what they do instead of selling the whole, let's say they think that this entry point here in SPY actually isn't the worst entry point. Okay, but they realize that this market's come too much, too fast. Sentiment came too much, too fast. What they do is they sell a chunk of it, roll it up and out into a different strike, and put less money at risk. So they're paying themselves and they still have exposure. And they will continuously do that. You know, if they like their initial spot of entry, Microsoft. We saw that in Microsoft. Microsoft, if you remember, they started aggressively sweeping those cheap calls. They rolled them up 3 times after that. They started off with the 110s, I think it was. Then they went to 112s, then 115s. You guys know better than me. You know, but, and I was getting a lot of questions about that too. They don't work that way. You know, these guys are considered smart money for a reason. They don't buy the lows and then just buy the highs just because things look bullish. They like to buy when we don't like to buy. And they like to roll and sell when we think the market's never going to pull back again. But yeah, that big size yesterday in SPY was a roll. Mandy saying, what's the G's? Oh, those 127. Yeah, roll. Mandeep, you're asking the same thing Mike is asking. If you guys, whoever's on private Twitter or in the room, we were talking about it, but on private Twitter, I posted it a couple times that it was a roll. You know? Oh, you are? Yeah. I posted it. I can dig it up for you. If you go to the search, you go, SL Steamroom search. Yeah, you know what to do, Mike. Yeah, people were talking about Tesla holding well today. There was some small sweeper activity. There was one put buyer, but it was in weeklies. It was a block, but nothing really noteworthy there in Tesla. But yeah, it's holding in until it doesn't. I try not to read too much into price action on a day-to-day basis. Really, it can get confusing, and for example, if this market is going to roll over to new lows, and you're relying on Tesla to buck that trend, you're asking to get really lucky. Can it happen? Yeah. But, the odds would be a lot better if, the market was just pushing higher and you were playing Tesla along with it. That's the problem with individual names right now. Because of the market conditions, you may see a price action or a chart you like in a name, but if, the rest of the market's getting beat up, it's going to be tough. It's going to be tough. Puzzled why the original Google missile didn't sell any of his December calls. We never know, Tree. We never know. Try not to get wrapped up in the selling. Did they sell? If they sold? Because how do we know this guy's not shorting stock behind the scenes, right? Or buying puts behind the scenes? It's not worth wrapping your head around it. because the truth of the matter is, Tree, we may have an idea, but we don't know these guys personally. We don't know what these guys are doing. So like I said, the way to approach this stuff, once you put the trade on, in my opinion, once you put the trade on, you got to navigate it now. You got to navigate it. You start looking at open interest to decipher whether you should sell your position or lock in profits. You're going to get into a lot of trouble that way. You're going to get into a lot of trouble that way. We are not getting 2 days of continuity in this market. So hard to read. Again, Ani, you try to read this market, there's nothing to read. There's nothing to read. What are you going to try to read? You're going to try to read what Trump is telling us about the trade war stuff? There's nothing. Again, the playbook in this market is to get long into bearish extreme and sell the rip. That's the playbook. That's the playbook. Get it out of your head that maybe 2017 type rally comes out of this. Maybe Square goes back to new highs. You got to get all that stuff out of your head and just trade what's being put in front of you right now. I don't know yet. We'll see where all the end of the day stuff end up. My bet is we're probably maybe a little bit under neutral, I would think. A little bit under neutral. The squeezometer was pretty washed out. So, that's something we can look at to see if there's any sweeper activity that comes in, tomorrow more. Oh, tomorrow it closed, god dang it. So if any sweeper activity comes in when we get back Thursday, Friday, we're to play for a squeeze type thing. But for a meaningful rally, you want to see, and Ani, you know which ones I'm talking about, you want to see our bread and butter sentiment indicators light up, You want to see everything line up. And, if they squeeze it without you, what are you going to do? If they squeeze it without you. But you want to wait and allow those things to set up. And don't get me wrong, listen, we could come in Thursday, okay, and this market could gap up at the open 40 handles, okay, and there was no sweeper activity today. They can squeeze the market without sweeper activity, obviously, but the point I usually try to make to you guys, this type of squeeze, okay, the big ones, the good ones, sweepers usually have their hands on that. The little ones, and what I mean by little ones are these, okay? You get, here, this one. See bar 3 here? I'm just giving an example. Bar 3, low, you had some weakness early on, and then you squeezed, right? This doesn't look like much, all right? But if you're a day trader or a short-term trader, this, right? If you come in looking and you see action into the lows and you catch this, that's a profitable move right there. That's a profitable move right there. All right, if that's your style. Okay, if that's not your style, then you have to wait and allow this type of setup here or here, both of them, they lined up perfect. All right, so this is more of like the swing trading squeeze, right? So that's when you get shorts and bears all lining up there. That's the short-term trader sentiment we look at. That's that. Okay, the squeezometer, you're looking for moves like that I showed you here. So that's what I'm saying. Thursday, markets close tomorrow. Thursday, if we come in and there's some weakness, but there's some sweeper activity into that weakness, we can play for something like this. I said, how to tell if the market will continue down for a few more days. Will you look at sentiment and sweeper activity? Please elaborate. I guess I don't look at it that way. Here's the best way to look at it. Okay, here's the way I look at it. When I see the sentiment readings line up, okay, let's say we're right here. Let's say it's day 4 or day 5, right? So here, the indicators now are flashing bullish. Okay? Bull. Look at me. I'm like John Madden. Look at me on this board. Huh? You think I could do this? All right. So now, instead of me looking at it, how much more downside or through those lenses, because that's how you really, if you're looking for only X downside, if you see a little bit more, it throws you all out of whack. So for me, any further weakness into this bullish sentiment signal, I want to look to get long. You understand? And I'm looking for the sweeper activity to guide me basically how aggressive I want to be. All right. So that day we saw that action come in with Facebook, Google. Okay. Because that was a little more aggressive, I bought all of them. Right? If that action didn't come in and there was only, let's say, a sweeper in Netflix. By the way, Netflix caught a small sweep. Remind me to tell you guys afterwards, just to keep an eye on. But if, let's say, Netflix was the only one that caught a decent sweep, all right, and we got bullish sentiment signals, I'm going to take a shot on Netflix. All right? Let's say tomorrow we chop around, little green, not much of a squeeze, and boop, we go into the red again. I'm looking, if sweepers give me the go-ahead, I'm looking to get long or something. Okay? If you guys remember, a good example is the most recent one. All right? Because I'll be honest with you guys, if we had another down day or two, I would have made a real nice hit. Okay? And I don't like to play anytime you make money in this game, you're humble. But if we would have had one more day of weakness, I would have made a bigger dent. Why? Because I was buying into this. Okay? So what I did was, when we had bullish sentiment signals into this. All right? So that's telling me that the risk is to the upside. Can the market go lower? Yeah. But there should be buying. There's a higher probability of a squeeze coming rather than up here because sentiment's so bullish, right? Everybody already sold already. That's what sentiment's telling us. Everybody sold and they're short. All right, so any weakness, I'm looking to be a buyer of something. The more aggressive the sweeper activity, the more I'll get long. All right, so like we were talking about, we had DIA, there was a buyer there, right? We bought some of that. There was a day PCG, I bought some of that. I just told you Facebook, Google, we bought some of that. What was another cockamamie? Yelp, right? There was a May missile in Yelp. I remember it came into weakness. I think it was this day right here. I bought that. So right here, I remember saying, you guys probably remember, if we had another day or two of weakness and hung out down here a little bit, that would have gave me more time to buy other stuff, right? Why? Because bearish sentiment was at an extreme. So I want to look to buy into weakness there. Anytime, especially if we're seeing $1 million sweeps, like that's ideal. That's what I want to see, right? I'm not telling a 200 contract weekly player, right? Yelp got hit with I don't know what it was, $800,000 May sweep. Like that's music to my ears into weakness with bullish sentiment. All right. So I'm looking, again, I'm not buying in one spot. I'm looking as the action comes in, the more they buy, the more I buy. Now, let's say there's no sweeper activity, okay, on a day of weakness. I'm not just going to make something up. If I'm already long something, I'm cool. Let them show up and I'll continue to add. All right. And then when this comes, that's where I'm looking to de-risk. You understand? If I want to hold anything longer term, I'll leave a runner, I'll roll out, which I'm not really doing right now, that sort of thing. Okay. And then I'm looking for another setup similar to that. All right. A lot of times what happens, let's say if we're in a bullish start of, let's say this is the bottom, which it could be, right? Let's say this is bottom. We don't know it yet, but this is the bottom. What we're going to see sweepers support this bottom. All right. So let's say we come in Thursday. Tomorrow I'll be at the racetrack. So Thursday, and the market's up in the morning and reverses. Whoop. Oh my God. Armageddon. All right. Sentiment getting bearish. And then we see somebody come in. Whoop. $1 million sweep in Netflix. All right. And we see, there's Neil Diamond again in the DIA calls. There's this guy. All of a sudden they're buying this, right? So that's how you eventually come out of this. And then you'll see the lower high type of thing. You understand? If this is a low and the beginning of an uptrend. If this is a downtrend, what happens is they won't buy until there's a flush. And then you'll start to see the big action come in. Yeah. Oops. Does that make sense? So the answer to your question is I don't need to pick the exact day of the bottom. It's ridiculous for me to think I could ever do that. I want, basically, when I have sentiment on my side, I want to put money to work when I see Sharpies put money to work. All right. And listen, it doesn't have to be the same stuff. That's the beauty of this market right now. So let's say they sweep Facebook. All right. And you're playing for a squeeze now. This is different, right? You're playing for the squeeze. So let's say, Facebook may go higher, but you think you're going to get a bigger bang for your buck off SPY calls or ES or whatever the case may be. So that's the beauty of this market. You're using the activity as an indicator as a whole rather than selectively for individual names. When you're in that bull phase in an uptrend, that's when the names become more important because you want to see action into new names that haven't moved yet as much as some of the others. Yeah, so Mr. Khan over here saying for the long side, if you're asking for the short side, I don't play the short side, okay? But if you're going to play the short side, yesterday and this morning were the days, and I'm not just saying it now. You could ask guys who are members in the room. Yesterday into green and this morning were the days to put on short positions. Why? For the same reason that I sold almost everything I bought down here. Because here into green, retail was super bullish at an extreme, and that makes us bearish. Make sense? Okay, but the short side, the reason why the short side is so difficult is because the intraday squeezes kick the living daylights out of you. They're not easy to sit through. They're not easy to survive. All right, so let's say you get a rally tomorrow. Well, actually, you can't now because sentiment got washed out today. So if you're short, if you were looking to short, that was your window. But whatever you do, listen, here's the thing, Mr. Khan, and I can't pronounce your first name. I apologize. So I don't want to pronounce your name wrong, so I call you Mr. Khan, okay? Whatever you want to do, okay? Let's keep it simple, all right? Let's keep it simple. Forget about nailing lows and highs, all right? What you want to do is basically, if you're looking to get long something, you want to do it at or near bearish extreme. Okay? And if you want to short something, you want to do that at bullish extreme. That's basically a simple guideline. All right? So what you never want to do, and you'll be better off than a lot of the retail players out there, you never want to short into bearish extreme. That's how you get annihilated. All right. And, on the flip side, you never want to buy into bullish extreme. But the difference with that is people in a bullish trend get away with it. You understand? They get away with it sometimes. It ends up biting them eventually, but they get away with it. So that's why that habit's so hard to break. But I'm talking about the short side now because you seem to be interested on that. You don't want to short into bearish extreme. You don't want to do that. All right. If you want to wait, let's say right here was your short signal and you want to wait for it to be confirmed, that's fine. This morning was your confirmation, without a doubt. You couldn't ask for a better confirmation. It doesn't work like that all the time. But this morning and yesterday, you even had you even had the flow look like this. Look at this. So that's your confirmation. If you didn't want to short into the gap up the prior day or sentiment, this was your confirmation of your short. All right. And I see the question again, and I know you guys get tired of it, but somebody's asking it, so I'm going to answer it. The reason why I don't participate on the short side, okay, even in the smallest way, is because, like I said, I have degenerate blood. And I'm more disciplined as a player in this game, waiting for this setup. You understand? And the problem I run into is that if, let's say I got short here, right? I'm holding short positions. All right. And let's say we're not at bullish sentiment yet, but we come in Thursday into a little bit of weakness and sweepers annihilate that weakness. What am I going to do? I got to take off all my shorts and then flip long. You may say you could do that. Not many can. Yeah, and that too. Going and saying just pull up longer term chart on SPY, and that's another reason why I don't. But he's right though, he's right. Because and Gordon, the truth of the matter too is I don't mind. You see, like the playbook right now, I don't mind that. I don't mind trading in this environment like that. I think I'm better at it than in other environments because I got a quick trigger finger. I like to sell rips. And when you're in that bullish trend, you know what I mean? I have trouble holding winners. A lot of people have that problem. But I'm pretty bad at it. Options especially because you got time against you. And everybody's worried about in options because of that juice and all. You get, like, for example, let's say here, okay, you bought here and now you want to hold for that bigger move. You got to be able to stomach this. You understand? Like I said, this could be the lows right now, for all we know. And this could be the start of a bottoming process where this thing heads higher. You got to be able to stomach these days holding calls and giving back all that juice. It's not that easy in options, as you guys know. So I feel more comfortable and I have more success when I'm selling into strength. You know, the liquidity's there. You could get out easier. And then I curse it out if it continues to go higher. You know, like an example here, Yelp. And, you know, only time will tell, right? But Yelp. So we bought it down here off the big May guy. Okay. And, you know, there's a lot of time there. Okay. But, you know, there was some nice profits off that trade. And you guys heard me complaining. I was contemplating, should I hold it? Should I not? I ended up selling it and it went higher yesterday and I was cursing it out. But if I didn't, like today, you know what I mean? All that juice gets sucked out and then some. You got to be willing. You got to be okay with that. You got to be okay with that. And hence why you would, you know, buy that time. But I'm bad at it. Even when I buy May calls, you know, if I, you know, like for example, if I reach my target, like let's say I'm looking for a double and I see the double in 2 weeks, I yank it off the table in options. You know, but you see what the smart money does, right? The smart money, especially in bullish climates, they just roll up and roll up and roll up. That's how they catch these moves like this. You know, so they sell the rip, they put some money in their pocket, and they roll up and out. You know, rips, consolidates, rips again, they do it again. They continue to do it until the last batch goes south. It's really difficult. Really difficult. Paul, that 71 reading on the squeezometer was the ticket. Didn't get all the move, but was green. Yeah. I'm glad to hear it, Paul. I'm glad to hear it. And that's, you know, as you know, forget, you know, all of the move and whatever, right? In this type of market, you're looking to make some money, survive, and big picture wise, like I told you guys, it's coming out of this environment where the big money's made. I'm being honest with you guys. As much as I like to trade this stuff, you know, active playing, it's exciting, it's entertaining, hopefully profitable. The big money's made when you come out of this, whenever that is. Every player I've ever come across throughout my career who got to the next level out of a corrective phase. Every single one, guys. For the simple reason that they were around and they had their eyes open and their guns cocked and ready for when the bulls showed up again. You know, because what happens is at the end of this phase, whenever it may be, who knows, could be just a starter. Well, who the hell knows? Okay. But by the end, usually most retail players, most players in general are so frustrated, fed up. They think every rally is fake. Let me tell you something. 2008, okay, Armageddon, as you guys know it. Some of you didn't even, you know, may not even traded through it. Every single rally from those 2009 lows all the way up to 2017 was brushed aside by retail. Every bear in America was calling for Armageddon this whole way up. The whole way. And that happened because 2008 scared the living bejesus out of everybody. Not only scared them, cost them a lot of money, to the point where they didn't even want to bother to look at the market anymore. And those who stuck around were rewarded. And that's why you'll bump into traders who, are fairly new to the game, are trading post 2008, and what they don't realize, they stepped in shit. They started trading in 2010 or the 2011 correction, and they caught a raging bull, and they never saw a real correction or a bear market to wear them out. But they found success, because that's where you find success, coming out of this stuff. Jay, I honestly, I can't even, you know what I mean? I can't even blame you. Jay's saying he traded through 2008. He couldn't even touch a long for 2000 till 2015. I can't even, you know what I mean, Jay? I got nothing to say. I told you, I'm not embarrassed to admit it. I don't know if you know, I mentioned it in the past. Jay, I literally was liquidating bank accounts and brokerage accounts and putting money in a safe and under the mattress. That's what 2008 did to me. Okay? People were asking me, oh, did you catch the short side in 2008? I said, catch the short side? I was more concerned whether the money I had in my brokerage account was still going to be there the next morning, let alone try to make some money on the short side. But it scarred a lot of people, right, Jay? Scarred a lot of people. And that's what they do. And listen, they're not all, as you know, Jay, they're not all that bad. They're not all that bad. 2000, the tech bubble blew up. It was pretty bad. But there were places to hide, and, crazy opportunity. 1998 was more of a correction than a bear market. Same thing. Beat the living piss out of people. And then what followed in 99. So, yeah, Jay, take my word for it. The 99, the bubble, it wasn't as easy. Put it this way, the more dumbfounded you were, the better off you were. Like my friend, I remember my friends, their parents, like their mother, did better than me, better than I did in the market, because they would just buy in any internet name and hold it and thinking they would go up forever, and I was scared shitless. So I was a little newer in the game, but 99 was far from my best. Wasn't even a good year. I told you guys, the best years of my career came out of the tech bubble. That 2001, 2004 stretch. That's where I made all my money to this day. I did even better out of that than the 2008 disaster, because like Jay said, 2008 scared the bejesus out of me. Your best was 08 on the short side? Yeah, Joey, I'm saying this market is easier to trade if that's what you're looking to do. You understand? In other words, what I'm saying is, if you look to buy at the right times and sell into the right times, you feel like you're doing the right thing and you will get rewarded. Okay? 2017, that's not a trading market to me. That's not active trading. Like I said, every sell ticket you put in throughout this whole rally, you were a jackass, right? People were buying Facebook, selling it, and then buying it 5 points higher the next day. You don't get away with that, Joe. You know, if you think you're going to get away with that, then you're pretty new to the market and you haven't experienced corrections. It's that simple. We call that climbing the ladder, right? You keep buying the same stock at higher prices. Why don't you just hold the damn thing if you think it's going higher? This is a different story, okay? This, if you buy this and sell this and buy this and sell into this, that's trading. No? No, this is, if you're investing, this is a great time. If you're trend trading, less is more here, right? You basically want to, whatever you bought, you want to hang on to. That's what happens in a bull market like that. You know, when you get into this type of phase here, or like 2015, 2016, if you just buy and never sell, you're going to get lumped up. Or if you buy where you're supposed to sell, you're going to get lumped up. What's Ron saying? Been listening a couple of months. This was the best webinar so far. Thank you, Mr. Ron. What else is going on here? Still new to your lingo and the way you see the market and sweepers. Honestly, guys, in regards to questions like that, my recommendation to you guys would be go to wallstreetjesus.com. Oh. And this right here, strategy section. If you click on that, you got some easy to read blogs that kind of break down some of the lingo and what we're looking at. All right, but just like everything else, you know, you can't expect to walk in and understand in detail everything I'm talking about. All right, but here's one thing I will promise you. I will let you know when sweepers are aggressively getting long, and I will let you know when sentiment lines up. And I will keep you updated daily. That's a guarantee. I can tell you from experience, again, this is my first chat room, trading room, and membership stuff, or any of that. The biggest problem I see amongst people who sign up is they're not paying attention. You understand? If you bought anything yesterday, anything into the gap up yesterday, you just weren't paying attention. There's no other way to look at it. You know, I mentioned it the day prior that we were going to run into a tricky situation where the upside, if we went higher off the tariffs, would be limited and that we should take profits any upside. The morning of the gap up, I reiterated that, the same thing. Based off sentiment, that's what it's telling us right now. The sweeper activity was abysmal and put sweepers, were in complete control into a green day. You know, and we spoke about that ad nauseum throughout the day. Several traders who have been trading in the room for a while, they were harping on it all day. Right? Tim, option trader, you guys know him in the room, mentioned it a gazillion times, how the put action was telling into the gap up yesterday. You know, the squeezometer up in the 70 range. Again, all of us talking about how that's a big red flag. Put the calls with a 5 handle. Big red flag. So if you got long yesterday, the market, and this took you by surprise, it's because you weren't paying attention. And that's what I think the issue is with a lot of people who sign up. What happens is, I'm not saying they're not paying attention totally. They're paying attention, but at the same time, they're paying attention to 9 different other things they're looking at, right? So, there's a Fibonacci retracement on Apple here, and not remembering or not realizing that, sentiment is screaming at us. This is not a place where you want to put on risk. But they see a Fibonacci, or they see something, within the Facebook tape, or they see a chart set up, right? I heard the word yesterday, breakout, being thrown around on numerous things. So if you're a breakout buyer, then you weren't paying attention to the signals. But what I'm saying is this is what I say to everybody. If you're having a tough time, okay, in the market, I'm not talking about getting lumped up. I'm talking about if you're spinning your wheels and you're giving, private Twitter or the Steamroom a shot. You shouldn't be focusing on all the noise that you've been spinning your wheels off of. You understand? Why would you sign up then? Right? I'll give you another example. Of course, I'm not going to blow people up and mention names. You guys know that. But those in the room probably know all the guys I'm talking about. Into this, where I just told you guys I'm incrementally looking to get long into weakness on any sweeper activity. I want to see more weakness because that's how more long I'll be. At the same time, Neil Diamond is sweeping DIA and $1 million sweeps here and there. People were buying puts. People were buying puts. Okay? People were putting on new swing positions on the put side, while I'm screaming about sweepers showing up and bearish extreme sentiment signaling a big time squeeze on the horizon. Like, if you don't want to get long this, you don't hear me, bitch. If you don't want to get long this because you don't like what's going on, you don't like the price action, you don't like whatever, that's fine. That's your money. I don't have a gripe with that. But if you're going to short this, while all the signals we religiously look at are telling us the last thing to do is short this, then what the hell are you doing paying the membership? Right? You see my point, right? Like, why are you pissing away even more money and showing up every day in the room? Why? So that's exactly, Gordon. The bias gets the best out of people. And that's why I tell you guys, the short side, if you're new to trading and you haven't found success, I'm telling you right now, you should take the short side and to flush it down the toilet bowl. Because one of the hardest things to do is short on a swing basis. If I told you, name me traders who short and have found success in this game, you won't give me more than names that I can count on 3 fingers. Talk to Dick Chanos about shorting the market. You'll have nightmares. So that's why I tell all new traders, forget the short side. Okay? Try to master the long side. Try to wait for these type of setups and get yourself to fire and not be afraid of a loser, because it's just a loser. And if you just continuously look for these setups into sentiment and sweepers confirm, you're going to have a hell of a lot more winners than losers. Wait for that. You get that down pat, then you can play both sides of the fence. But if you think you haven't found success yet, and you're going to get long here and short here and get long here and then short there and then get long here and then get out quick enough and short there. I mean, come on now. What do you think you are, Houdini? I'm telling you, I'm telling you guys, I'm in the game 20 years. 20 years. And I wouldn't even dare try to do that. Dare try to do that. So, but that's, like Gordon's saying, that's what happens. Everybody, especially newer traders, they think they're going to become Paul Tudor Jones. And they come in and they're going to make money every day and swing this and that and swing every day. And, they lose the money. What are you going to do? All right, boys and girls. Yeah, it's been fun. So listen, all kidding aside, if you're new, okay, if you're new and you have an interest in learning a little bit more, free trial, yeah. There's well, first of all, again, take a look at the strategy section. All right, there's 2 pages there, easy to read. Trust me, some trade examples, but just so you get an understanding of what the hell we're looking at. And then if you're interested in the trial, we got this here. So go to wallstreetjesus.com, 3-day trial. No credit card down, no nothing. Zippo. All right, so no obligation there. And you'll get access to the room. You won't get the Twitter feed. You don't need it for the trial. And 3 days there. All right, then it's 50% off the first month. That, private Twitter, you could go to the bottom of this page or go to products and you go to private Twitter feed and you put your name in here. Your handle. That's $59.99. $60 for the month. George, what do you mean? How often do I have what calls? What do you mean calls? Yeah, Chris, you bring up a good point. Chris is saying in 2008, if you placed bets based off bearish sentiment, you would have been wrong. And Chris is right. Okay. What I'm about to tell you is, Chris, 2008 was Armageddon. Okay. What about all the other times you were right? Everybody looks at the wrong, Chris. So here's my point. Okay. You are 100% right. And that last waterfall in 2008, before it hit the bottom in March of 2009, right? That last whoosh where everything was going out of business. If you were going to make a bet off sentiment, you would have lost money. There's something wrong with that? There's no end to that. That's it. You would have had a loser. Prior to that, even some of the lows in 2008 off 2007, there were still rallies off sentiment. The only time there was that waterfall selling off sentiment, and honestly, there was no sweeper confirmation. But I can't even remember exactly what went on then. But that was the one time where you would have lost money, yeah. But you would have also lost money in real estate. You would have also lost money in your own business. You would have also lost money pretty much in anything else. You would have lost money if you had your money at Washington Mutual in cash. You would have lost money. So now, you want to talk about every single time you would have made money? We don't have the time for that. No, I know. I'm saying that's everybody looks, and I look to. We had a Saturday webinar, Chris. We do Saturday webinars every Saturday where we looked at the worst case scenario. If this is a replay of 2008, what it would look like. Just so everybody knows what being wrong looks like. And the beauty about that is in options, you lose what you risk. This market could go to zero tomorrow, and the most you're going to lose is what you put up at risk, right? So that's where it all comes down to money management and everything else. You know, that's not just the market, that's everything else in life. In other words, you can't, if you're going to come in, and I don't mean you, Chris, I'm just saying in general, if you're going to come into this game and say, all right, I'm going all in at this low right here, and if this doesn't squeeze from here, I'm going to be on the corner with a cup. You know, and it rallies, you make some money, and you treat the same thing, you do the same exact thing on this low again. All right, that low worked. I'm putting everything I made and all my principal into this low right here, and if it doesn't squeeze, I'm going to be on the street corner with a cup. I mean, if you take that approach, you're dead eventually. But if you manage your money properly, right, and you risk whatever you're risking here, generally in the same ballpark, you make some money. You risk here, generally in the same ballpark, you make some money, right? You risk here, generally the same ballpark, you risk some money. You risk here, generally in the same ballpark, you lost. You should have made money. No, Chris, the only thing in '08, that last flush in '08, what I'm trying to tell you is the market was the last thing on my mind. Did you trade through 2008? Okay. That last flush in 2008, I'm telling you, I was liquidating bank accounts because I was worried about my money in the bank. You think I was concerned about what sentiment was showing me into that final flush? I mean, I can lie to you and say yes. I mean, you understand? If this is 2008 again, okay? If this ends up being 2008 again, Chris, your speculation account in options is going to be the least of your problems. The least of your worries is going to be your spec account in the options market. The least, I promise you. That's what I'm trying to tell you. He's so right. People were growing their own food. You're so right, Jay. People were growing their own food, man. You guys think I'm bullshitting? People were growing their own food. You know, so I wouldn't worry about it. And here's, you see, this is the point that Jay and I were making earlier. She's saying he got goats for milk. Oh, you're serious? Holy cow. Listen, I'm telling you, I was in the same boat. I wasn't milking goats, but this is the point Jay and I was making earlier, Chris. That 2008 was Armageddon. And think about everything we're talking about now. You know, the last thing on people's minds was the market, except if your name was David Tepper and you were buying the living daylights out of everything. You know, you can't, forget using that as an example for anything in this market. If you're trading options, you know, that's your spec money, your gambling money. Okay? You're not investing for your kids' college in the options market. If you are, please stop it immediately. All right? It's your spec account that you're trying to be aggressive with and trying to see above average returns in. Okay? If the worst that happens to you in 2008 is you put on a couple bets off sentiment and they got run over because of some contagion credit crisis, it's the least of your problems. And like I said, anybody who hung around, whether it was Jay, who it took him a couple years before he could even play again, anybody who hung around more than made up for anything they lost in 08. But I mean, you had major banks going under. Right. Chris is saying if it happened again, he would keep buying. That's why it's not going to happen again. Oh, you're asking me. Now, keep buying what? Chris, here's the point you're missing here, okay? Everybody can talk a big game, all right, now in hindsight. If I'm telling you I was more worried about the money I had in the account than making money, now think about that frame of mind for a second. You had Lehman, Bear Stearns, Merrill, Goldman on the verge of going under. Overdone? It wasn't overdone. The economy was on the brink of collapse. It wasn't overdone. It was on the brink of collapse. The American economy as you know it. Bear Stearns, Lehman, they really went under. It's not a mirage. It's not fake news. Merrill Lynch, you know the bull Merrill Lynch? They were forced to get acquired by Bank of America, right? Bank of America, because they were going under. And then Bank of America went under. Yeah, Gordon, he's saying he traded through that time. But I don't know. I guess he's asking me if that happened again, would I be buying? But I think you're missing the point I'm trying to make here. Okay? If something to that magnitude happened again, the last thing you're worrying about is making a little bit of money on your calls. You know, the last thing. Oh, I see what you're saying. So you're saying, would I buy Deutsche Bank because they're saying the same thing? Why? Why would I buy Deutsche Bank when I just told you Lehman, Merrill, Bear Stearns, all of them went south? All of them. I mean, Bank of America was owned by the government, for Christ's sake. Fannie Mae, Freddie Mac, you name it. So take DB and times it by the whole financial industry. Yeah, you know what it is, Chris? I think you're getting ahead of yourself, and this is one of the issues I think traders have. They think too big, you know? They're trying to get more out of what they're capable of doing. I'm talking about playing for a squeeze, you know, and you're talking about buying into a financial collapse. We're on two different planets right now. If you're saying what would sentiment look like in a financial collapse, I'll tell you when we get there. you know, but I wouldn't be worried about that now. You know, and it's funny that you mentioned that because those are the signs you would see, all kidding aside, if there was something bigger on the horizon. What you would see is a complete lack of call sweeper activity, call buying, right? They would never show up. You know, back then there wasn't a call sweeper to be found. They were buying Lehman $5 puts with the stock at 50, with IV juice to wazoo. All right, but you would see a total dry up of call sweeper activity. And what you're saying, Chris, would be one of the main signals of something bigger on the horizon. If you see sentiment lined up, okay, and the market just run through it on the downside and continue in liquidation mode, obviously there's something bigger at risk. Okay? So you would lose that money that you took a shot with on the call side and then wait for the liquidation or Armageddon to find a bottom. That's what I would suggest. You know, but it's so funny how people, and I'm not just picking on you, Chris, but it's so funny how traders, when they see Netflix up 150% 3 months into the year, they don't think about that stuff, right? They don't think about this. Like, look at this, or Facebook, or any of these names. Look at this. Nobody worries about losers up here. How come? When they're buying the highs. How come nobody worries about the losers here? You know, that's where you got to be careful. Up at highs, when everybody's bullish, is where you got to be careful. That's where things come down and stay down. You know, but people always worry about losers when things get dicey. I guess that's human emotion. What are you going to do? All right, guys. I appreciate everyone stopping by. I'll post some stuff on regular Twitter, and those of you who are members, I'll keep you updated on the sentiment as it updates tonight. We'll see. We're off tomorrow, damn it. So maybe I'll simulcast from Aqueduct Racetrack if I make it over there tomorrow. Anybody who was asking questions, just go to wallstreetjesus.com. You'll get information there regarding the trial and any questions you may have. All right. Enjoy the day off. If you're a degenerate, it's not going to be easy. The rest of you members and all, I'll see you guys Thursday. Be good, everybody.